2020, Genting Berhad recorded a significantly higher current ratio of 4.45 times compared to 2.2 times for Sunway Berhad. This indicates that Genting Berhad had stronger short-term financial position, maintaining double the liquidity of Sunway. Moving to 2021, both companies experienced a decrease in their current ratio. Genting was still ahead with 3.13 times, while Genting recorded 2.09 times. Although the gap is narrowed slightly, Genting was still ahead and remains stronger in terms of short-term liquidity. In 2022, the difference continued to narrow. Genting stood at 2.58 times, while Genting maintained a very stable ratio at 2.08 times. This reflects Sunway's consistency in managing the short-term asset despite trailing behind Genting. In 2023, Genting regained some ground and improved to 3.00 times, while Sunway stayed steady at 2.10 times. This suggests that Sunway remained resilient with consistent liquidity, although still behind Genting. Finally, in 2024, both companies saw a slight decline. Sunway stood at 2.01 times, while Genting stood at 2.58 times. Despite the decrease, Sunway showed consistent management of its liquidity throughout the year. Moving on, I will present about quick ratio, which reflects a company's ability to meet its short-term liabilities using its most liquid asset. In 2020, Sunway Berhad recorded a quick ratio of 0.52 times, while Genting is much lower at 0.22 times. This shows that Sunway had more double the liquid asset to cover its immediate liability compared to Genting, clearly showing stronger liquidity. Moving to 2021, Sunway's quick ratio dropped to 0.50 times and Genting improved to 0.33 times. Although Genting showed some progress, Sunway still maintained its lead, managing liquid asset effectively. In 2022, the number remained quite steady. Sunway stayed at 0.50 times and Genting slightly increasing at 0.35 times. This shows both companies were consistent, with Sunway continue to lead. In 2023, Sunway ratio was unchanged at 0.50 times, while Genting experienced a minor drop at 0.34 times. This indicates that Sunway had consistent liquidity management, whereas Genting showed a slightly regression. Finally, in 2024, Genting made a notable progress, improving to 0.40 times, its best in 5 years. However, Sunway slightly improved too, reaching to 0.52 times. This means Sunway still remains ahead in terms of short-term financial strength.
Let's start with 2020. We see that Sunway Berhad had a fixed turnover asset 1.22 times, while Genting Berhad recorded only 0.26 times. This means Sunway outperformed Genting by a wide margin. Essentially, Sunway generated nearly 5 times more revenue per ringgit of fixed asset than Genting. This indicates a much better efficiency in asset utilization for Sunway during that year. Moving on to 2021, Sunway Berhad's fixed asset turnover increased significantly to 2.94 times, while Genting remained almost flat at 0.27 times. The gap widened even further. Sunway's fixed turnover asset more than double compared to 2020, suggesting that its operation recovered or expanded strongly. In contrast, Genting's stagnant fixed asset turnover indicate that its tourism and hospitality operation were still heavily impacted by the pandemic. In 2022, Sunway Berhad fixed asset turnover rose further to 4.07 times, while Genting showed a strong recovery, increasing its fixed asset turnover to 1.46 times. Although Genting tripled its fixed asset turnover, Sunway still led by a wide margin. This reflects that while Genting utilized its fixed asset more efficiently compared to previous years, Sunway maintained superior efficiency. For 2023, Sunway recorded a fixed asset turnover of 4.52 times, and Genting improved to 1.87 times. Both companies showed a progress. Finally, looking into 2024, Sunway Berhad reached a fixed asset turnover of 5.36 times, while Genting dropped to 0.57 times. Here, Genting's efficiency fell sharply, possibly due to a large new investment, underutilized asset, or declining revenue. In contrast, Sunway continued optimize its asset. Move forward to total asset turnover. Let's begin with 2020. Sunway Berhad recorded a total asset turnover of 0.15 times, while Genting Berhad was slightly lower at 0.12 times. Although Sunway had marginally better asset utilization, both companies were operating at very low efficiency levels, likely due to the pandemic-related disruption across all sectors. Moving on to 2021, both companies showed slight improvement. Sunway was 0.5 times, and Genting was close to 0.13 times. So overall, both remain inefficient. In 2022, we see a significant shift. Genting Berhad recorded a large jump into total asset turnover to 0.78 times, overtaking Sunway, which recorded 0.19 times only. This indicates Genting's strong revenue recovery post-COVID, especially in its leisure and gaming segment. And then for 2023, Genting's total asset turnover improved further to 0.93 times, nearing 1.0, which indicate excellent asset utilization. Sunway also improved steadily to 0.21 times, but remained behind Genting.
Next, the debt ratio, which shows the proportion of total asset financed by debt. In 2020, Sunway debt ratio was 54%, higher than Genting, 45%, meaning Sunway relied more on debt for its asset. In 2021, Genting ratio rose slightly to 48%, surpassing Sunway, who improved to 47%. In 2022, Genting ratio jumped 39%, reflecting higher borrowing, while Sunway remained stable at 48%. In 2023, Genting stayed at 59%, while Sunway held steady again at 48%, showing consistent discipline. Finally, in 2024, both companies had identical debt ratio of 49%, suggesting Genting reduced its leverage while Sunway increased slightly in line with growth. The analysis highlight that Genting was generally more leveraged and exposed to higher financial risk, especially between 2021 and 2023. Sunway, on the hand, showed more control and consistent financial management over the period. Let's start with the debt to equity ratio, which measures how much debt a company uses relative to its equity. In 2020, Genting Berhad had a ratio of 70%, more than double Sunway's 30%. It showing Genting was more reliant on debt even before COVID-19. In 2021, both companies increased leverage. Sunway rose moderately to 44%, while Genting climbed further to 77%. In 2022, Genting ratio exceeded 100%, meaning its debt was higher than its equity, a sign of high financial risk. Sunway began reducing leverage, dropping to 35%. In 2023, Genting peaked at 116%, raising concern about sustainability. Meanwhile, Sunway improved further to 31%. By 2024, Genting reduced its ratio to 76, indicating deleveraging efforts. Sunway increased slightly to 37%, still within safe limits.
Now let's analyze the net profit margin of Sunway Berhad and Genting Berhad from 2020 to 2024. In 2020, Sunway slightly outperformed Genting with a 19% margin versus 18%. Despite the challenges of that year, Sunway demonstrated marginally better cost control. Moving into 2021, we saw a drop in profitability across the board. Genting edged ahead at 10%, while Sunway posted 9%. This may reflect Genting's more effective recovery strategies following the pandemic. In 2022, Genting experienced an extraordinary spike to 199%, likely due to one-off income or exceptional gains. Sunway, in contrast, remained steady at 14%, showing stable operation. In 2023, Sunway regained the lead with 13%, while Genting's margin fell significantly to 8%. This could suggest volatility or inconsistency in Genting's earnings. Finally, in 2024, Genting made a strong comeback with 73%, but Sunway's consistent growth to 16% reflects more reliable and sustainable profitability over time. Next, let's look at return on assets, which measures how efficiently each company uses its assets to generate profit. In 2020, Genting showed a much stronger performance at 18% compared to Sunway's 3.2%, indicating much better asset utilization. However, in 2021, although both companies saw a decline, Genting still led at 10%, while Sunway dropped to 1.5%. Possibly pointing to weaker asset usage on Sunway's part. In 2022, we again observed an extraordinary figure for Genting at 199%, most likely due to asset revaluation or unusual gains. Sunway remained stable at 3%, although it lagged behind. In 2023, Genting's return on asset dropped sharply to 8%, while Sunway held steady at 3%. This consistency suggests that Sunway had more predictable and controlled asset performance. And in 2024, Genting recovered strongly to 73%, while Sunway improved to 4%. This steady rise reflects Sunway's discipline and sustainable asset management over the years.